Hey everyone, welcome to another deep dive with us.
It's great to be back.
Today we're going to take a look at Indian mutual funds and their activity in December 2024.
Yeah, we'll be taking a close look at a research report from Phillip Capital India.
And I think it has some really fascinating insights, so I'm looking forward to this.
Absolutely. Looking at these sort of sector shifts and big name companies that the MFs are buying and selling.
Right, and what it all means for the market.
Exactly.
So let's just jump right into it.
Yeah.
Okay, so mutual funds poured a massive 411 billion rupees into equities in December.
Yeah, that's even more than the previous month.
Huge. So at first glance, you might think everybody's feeling super bullish, right?
Yeah, on the surface it seems like it, but if we kind of back up and take a look at the impact of new fund offerings,
Right.
which are basically, fresh pools of money coming into the market.
Right.
The actual inflow is down from November.
Oh, no.
So
it
paints a slightly different picture, doesn't it?
Oh, yeah, it does. Like there's this underlying current of investment, but maybe just a little wave of caution,
Yeah, I think that's a good way to put it.
starting to ripple through.
So what else does this tell us about how the market's feeling overall?
Yeah.
Well, the growth of what we call, open-ended equity AUM,
Right.
which is assets under management,
Right.
that also slowed down a bit compared to November.
Okay.
So AUM represents the total value of all the assets that these mutual funds are managing.
Right.
And that slowdown seems to support that sentiment of caution we were talking about.
Right. So it's not like a full-on retreat, but it's definitely not like a stampede into equities either.
Exactly.
Or like a
Yeah,
careful tiptoe forward.
that's a great analogy, yeah.
Yeah.
And to really understand where they're tiptoeing towards, we need to kind of zoom in and look at specific sectors that are attracting or losing interest from these mutual funds.
Right.
So that will give us a better idea of what these fund managers are thinking.
Okay. Let's shine a spotlight on some of the sectors.
All right.
So the report points out some pretty dramatic shifts. For example, the discretionary sector, which is basically, all those things we want but don't necessarily need.
Right.
Like cars and restaurants and entertainment.
Right. All the fun stuff.
Yeah, all the fun stuff saw a gigantic leap in interest from MFs.
A big one.
We're talking a 52 basis point increase.
Yeah.
And I'll just quickly mention, for those who might not know, a basis point is just 1/100th of a percentage point.
Right.
So that's a pretty big deal.
It is.
So why this sudden confidence in, people going out there and spending?
Well, it could be a sign that fund managers are anticipating a resurgence in consumer spending.
Okay.
They might be seeing, positive signs in the economy or anticipating a release of pent-up demand.
Right.
Basically, they're betting that people are about to open up their wallets a bit more.
Interesting. And it's not just discretionary spending that's, catching their eye. Healthcare also got a major boost with a 40 basis point increase.
Yeah. Healthcare is often seen as a safe bet, particularly when there's uncertainty in the air.
Right.
Investors tend to gravitate towards it because it offers stability and potential for growth.
Okay.
And, India's healthcare industry has been climbing for a while now.
Makes sense.
Yeah, fueled by things like rising incomes and an aging population.
Makes sense.
So it makes sense that they would be interested in that.
Okay, now IT is still on an upward trend, although the pace has slowed a bit with just a 15 basis point increase.
Right.
So is this a sign that it's still going strong, or is it kind of plateauing?
That is the question, isn't it?
Yeah, the million-dollar question.
Yeah. So, it could be that IT is still considered a reliable engine for growth, but maybe the speed at which it's growing is starting to ease up a little.
Okay.
So we'll have to keep our eyes peeled for future data to see if this is temporary or a more significant shift.
Right. All right, now let's look at the other side of the coin.
Okay.
What are the MFs cooling on? Looks like financials took the biggest hit with a drop of 31 basis points. Now that raises a red flag for me.
Yeah.
Is this a bad sign, or are they just kind of strategically shifting positions?
Well, it could be a sign that there are concerns about the overall health of the financial sector.
Okay.
But it's also possible that they're just taking some profits off the table
Right.
after a strong run.
Right. So context is key when we're trying to understand all of this.
Absolutely.
Along with financials, it looks like auto and ancillary, staples, and metals and mining all experienced significant drops.
Yeah.
Any ideas on why the MS might be easing up on these sectors?
Well, for auto and ancillary, it could be linked to, those global supply chain issues or maybe concerns about the rising costs of materials, staples, which includes everyday essentials.
Right.
Might be seeing a slowdown as inflation calms down and people become more cautious with their spending. And metals and mining, those fluctuations in global commodity prices could definitely be playing a role.
Okay, so we have a pretty good grasp on the overall mood of the market.
Yeah.
And, which sectors are hot and which are not.
Yeah.
But let's get a little more specific. I'm really curious to follow the money trail and see, exactly which companies are attracting the attention of the MFers or losing it.
Yeah, I agree. This is where it gets exciting. It's like we're getting a sneak peek into the minds of some of India's savviest investors.
Right.
Yeah.
So looking at the top buys, we see a mix of large cap giants like Reliance, Tata Steel, and Axis Bank.
Yeah.
But there's also a newcomer in the mix, Geo Financial.
Interesting.
What are your thoughts on this combination?
Well, it seems like they're taking a balanced approach.
Okay.
They're betting on those established players that have a proven track record, but also a willingness to embrace new opportunity.
Right.
Geo Financial being a newcomer is definitely one to watch.
Yeah, for sure.
Its performance could give us a glimpse into how the market views Reliance's venture into the financial services sector.
That's fascinating.
Yeah.
Now, in the mid-cap space, we have some interesting picks like NHPC, Union Bank, and IRB Infrastructure.
Yeah.
Are these sectors worth watching?
I think they definitely warrant a closer look.
Okay.
NHPC is involved in hydroelectric power,
Right.
which is gaining traction as India focuses on renewable energy.
Yep.
Union Bank, being a public sector bank, might signal renewed interest in that segment.
Right.
And IRB Infrastructure, which focuses on roads and highways, could benefit from India's push for infrastructure development.
Okay.
So yeah, definitely ones to watch.
Moving on to the small cap arena, VMart really jumps out with a massive change in its shares.
Wow. Yeah.
What do you think is fueling this bet on retail?
Well, it could be that investors are feeling bullish about the long-term growth potential of India's retail sector.
Okay.
Especially in those smaller Tier 2 and Tier 3 cities where VMart has a strong presence. This move could also indicate a belief that consumer spending in those regions is poised to take off.
Okay. Let's switch gears and take a look at the top sells now.
Okay.
And seeing some of these big names on the list like ITC and NTPC Green really raises an eyebrow.
It does.
What do you think is behind the MFs stepping back from these companies?
There could be a number of reasons, for ITC, which has a large presence in the tobacco industry.
Right.
It might be linked to concerns about stricter regulations or maybe a shift in consumer preferences.
Right.
NTPC Green, being in the renewable energy space, might be feeling the pressure from increased competition or concerns about its profitability.
Interesting. And I got to say, seeing Swiggy on the sell list is quite noteworthy.
Oh, yeah, that one caught my eye, too.
Does this signal trouble brewing in the food delivery sector?
Well, it's possible it could be company-specific.
Right.
Maybe related to worries about their profitability or the competition they're facing.
Right.
But it could also reflect a wider trend we're seeing in the tech sector globally where valuations have been under pressure.
Right.
So could be a number of things there.
Moving down the list to mid-caps, Vodafone takes the lead with a massive drop. Is this just a Vodafone-specific issue or a sign of a broader trend in the telecom industry?
Well, Vodafone has been facing challenges in the Indian market for a while now.
Right.
So this could be a continuation of that.
Right.
But it's worth watching other telecom players to see if they're experiencing similar outflows.
Okay.
Which would indicate a wider issue within the sector.
And lastly, we have RBL Bank and Manappuram Finance standing out in the small cap sell list.
Right.
Do you think these could be potential warning signs in the financial sector?
Well, they could be.
Okay.
RBL Bank has been grappling with some internal issues.
Right.
And Manappuram Finance, being in the gold loan business, might be facing some headwinds due to fluctuations in gold prices or changes in lending regulations.
Wow.
This definitely adds more weight to that earlier observation about the MFs pulling back from financials.
Right. Wow. We've covered a lot of ground already, from broad market trends to specific sectors and even, individual companies.
We have. We've basically assembled the building blocks for understanding the Indian mutual fund landscape in December 2024.
Right. But before we move on, I want to shift our focus to the listener for a moment.
Yeah.
We've seen where these, big investors, the so-called smart money, are putting their money. But what does it all mean for the average person?
That's a great question.
Yeah, what can people take away from all this information?
Well, it's one thing to just look at the data.
Right.
But it's another to apply it to your own decisions.
Right.
So let's try to break down what we've learned and see what we can uncover.
Yeah, we've given you the pieces of the puzzle. Now how you put them together and see the bigger picture is up to you.
Right. All right, so let's talk about cash. You know, that all-important resource that fund managers keep on hand. The report shows that overall cash levels held by mutual funds actually rose a bit in December, reaching 5% of their total assets under management.
Okay.
That's just a tiny bump up from November.
So on the surface, it doesn't seem like a huge change.
Yeah.
But I think it kind of hints at this growing sense of caution in the market.
Possibly. Yeah.
What I find really interesting, though, is the breakdown of cash levels for different types of funds.
Right.
It looks like ELSS, mid-cap, large-cap, multi-cap, and sectoral thematic funds all increase their cash reserves.
Yeah, that's definitely something worth noting.
Yeah.
It could mean that those fund managers are prioritizing flexibility,
Okay.
wanting to have cash ready to jump on opportunities if the market takes a dip.
Right.
Or maybe they're planning to rotate into different sectors.
Right. It's like they're saying, we're not ready to go all in just yet.
Exactly.
We're going to keep some dry powder on hand.
Yeah, just in case.
Yeah.
But then on the flip side,
Right.
we see that dividend yield-focused small cap, large and mid cap value and contra funds actually decrease their cash levels.
Now it's interesting.
Yeah.
Seems like they're really doubling down on their specific strategies.
Yeah. What's your take on that?
Well, dividend yield funds,
Mm-hmm.
as the name suggests, are really focused on finding companies that pay out those consistent dividends.
Right.
So they might be seeing some undervalued stocks out there offering some really attractive payouts.
Yeah, makes sense.
Focused funds, by their very nature, concentrate their investments on a smaller group of stocks. So their lower cash levels might just reflect a strong belief in those specific picks.
Right.
And what about small cap funds? They decrease their cash levels too, even though the market is showing some signs of uncertainty.
Yeah. Small cap funds are known for being a bit riskier,
Right.
but also having the potential for higher rewards.
Right.
So it seems those fund managers are still seeing some really attractive opportunities in those smaller companies.
Yeah, even with that cautious sentiment we were talking about earlier.
Yeah. Definitely bold move.
Yeah, for sure.
Large and mid-cap funds also reduce their cash.
Okay.
It seems they're not as worried about volatility as some of the other fund types.
Makes sense.
That could be because large and mid-cap funds tend to offer a more balanced approach,
Right.
investing in companies across the entire market cap spectrum.
Right.
So their lower cash levels might indicate confidence in those companies' ability to weather any short-term fluctuations.
Okay.
Value and contra funds are interesting too.
Yeah, definitely.
They both decrease their cash, suggesting they're taking a contrarian approach.
Right. For those who might not be familiar, value funds try to sniff out those undervalued companies with solid fundamentals.
Right.
Often going against the prevailing trends.
Exactly.
And contra funds take it even further, actively betting against popular sentiment.
That's right.
So their reduced cash levels could mean they're seeing some potential bargains emerging in companies that are being overlooked by the rest of the market.
Yeah, it's like they're saying, we see something that others don't, and we're willing to bet on it.
Right.
So yeah, definitely an interesting strategy there.
So when we look at all these variations in cash levels, it paints a much more nuanced picture of market sentiment than just focusing on that overall number.
Absolutely.
It's not just about being bullish or bearish.
Right.
It's about strategic positioning and having conviction in specific investment styles.
I think this deep dive really highlights why it's so important to go beyond just the headlines and dig deeper,
Yeah.
The numbers tell a story, but it's up to us to interpret it and draw our own conclusions.
Right now, if you're listening to this and thinking, okay, that's great, but what does this actually mean for me and my investments?
Yeah.
You're not alone.
Yeah, a lot of people are probably thinking that.
That's exactly what we're going to unpack in the next part of our deep dive.
We've laid the groundwork, we've explored the trends, and now it's time to connect the dots and see how you can apply these insights to your own investment journey.
Exactly. We'll be right back. All right, so we've seen Indian mutual funds are feeling cautiously optimistic, right? Favoring certain sectors like discretionary and healthcare, but pulling back from others like financials.
Right, and those specific stock picks we talked about, they reveal some really intriguing trends.
Yeah, that rise in consumer spending,
Yeah.
potential concerns in the financial sector.
Right, and IT still holding strong.
Yeah, though maybe not at the same pace as before.
Exactly.
So here's the big question for everyone listening, given all these trends. Where would you put your money in the Indian market right now?
That's what makes this so interesting, right?
Yeah.
This deep dive has shown you what the Phillip Capital report says, and now it's your turn to take that knowledge and make your own decisions.
Exactly. We've given you the pieces to the puzzle.
Right.
Now it's up to you to put them together.
So think about it. Which sectors are you comfortable with?
Right.
Which ones match your investment goals? Do you buy into that consumer spending story?
Right.
Are you more interested in renewable energy or infrastructure? Maybe you're a contrarian investor looking for those hidden gems?
Right. And remember, we're not giving financial advice here.
Of course not.
This is all about giving you the information.
Right. Empowering you to make your own informed decisions.
Yeah. Helping you ask the right questions.
Exactly.
Encouraging you to do your own research.
Speaking of research, here's a final thought.
Okay.
We've talked a lot about mutual funds, the so-called smart money.
Right.
But what about those small and medium-sized enterprises, the startups?
Yeah.
The innovators driving growth, at the grassroots level.
Okay.
They might not be on the radar of those big institutions yet.
Right.
But they could be the key to unlocking some real value in the market.
That's such a good point.
Yeah.
It's easy to get caught up in those big players.
Yeah.
But sometimes the real treasures are hidden.
Right. So as you explore the Indian market, don't just follow the crowd.
Right.
Be curious, be discerning, and venture beyond the obvious.
I love that.
You never know, you might find the next big thing.
Absolutely. Well, that's a fantastic note to end on.
It is.
Keep exploring, keep learning, and keep diving deep.
And we'll see you on the next deep dive.
Until then, happy investing, everyone.